Today I'm going to be teaching you ICT Daily Bias. I'm going to be giving you everything that you need to understand ICT Daily Bias for yourself. I'm going to simplify it for you and make sure that this is the only video you will ever need, so stay tuned. So all you need for ICT Daily Bias is market structure. So market structure defines if price is bullish or bearish. And the second thing you need is fair value gaps or fair value gap. And this is the PD array that price uses to push higher or lower. If you see, we have this simple example right here just for representation. Market structure shifts, fair value gap moves from fair value gaps. When it's bullish, it moves from bullish fair value gaps. There are times when price will reject the gap, then break structure and go the other way, like in this scenario right here, and then it continues, and you just use these two steps to just follow price and follow price action. Let price show you where it's going. ICT Daily Bias does not need to be hard. It's actually very simple. Now let's go to some live chart examples. So we're going to start off right here in this price action. So remember, we just use market structure and we use fair value gap. So if we are looking here, we see we have a recent market structure shift above this high. So now that we're bullish, we are expecting price to potentially continue higher. Where would we continue higher from? We would continue higher from fair value gaps. If we see we have a fair value gap down here, so we'd mark that out, and we'd expect price to potentially continue higher from this fair value gap. And obviously it does. So then we just continue and we just track price and just keep following it with market structure shifts and fair value gaps. So we have another market structure shift above this high. We have a market structure shift above this high. We have a market structure shift above this high as well. So now that we're bullish again, what do we look for? We look for fair value gaps. We see that we have a fair value gap here and here. So we'll just mark out this first one. And you can see price uses this gap to continue higher. And then what do we see after price uses this gap to continue higher? We get another market structure shift. Oops. Above this high. So now we're bullish again, and what do we see? We see a fair value gap right here. So we'd anticipate that price will move from this fair value gap to continue higher. But what do we see? We see price does not continue higher at this fair value gap. It rejects it, just like in the simple scenario that I showed you guys, and price breaks this low. So we are now bearish. We broke this low. So what do we wait for? Fair value gap to form. So we see we have a fair value gap here, this very tiny fair value gap, and we have a fair value gap here. So we'll just mark out both of these because it can move from either one of these. What do we see? Price comes up into these gaps, it continues lower, then it breaks this low. So now that we have a new market structure shift, we'd mark that out. Wait for a gap, we see a gap there, we'd mark that out. That's where we would expect price to move away from. We see it rejects that, and then now that we rejected that fair value gap, we break structure again above this high. Then what do we see? We see another fair value gap form, so we're expecting price to move away from that fair value gap. So price comes into that gap, taps it, and continues higher, and then we get the biggest move so far. So now that we had this huge move, what do we see? Well, we see market structure shift above this high. We also see a market structure shift above this high and this high. So we're bullish again. What do we expect? We expect price to move away from a fair value gap. We have two fair value gaps right here, so we can mark these out. And we expect price to move away from these gaps. We see price, it breaks below this low right here that we created in this gap, but there's no fair value gap, so that's not a valid shift in my opinion. But we do break above this high again. So you can call that a market structure shift because that is a high. So we have a market structure shift within this gap. Then we have another gap up here. So we expect price to move away from that. What does price do? It does not move away from that. And it ends up shifting bearish below this low. So now we have a bearish market structure shift again. And now we'd expect price to go lower. However, there is no gap here on this time frame, so there would be no trade, so we would just wait. Now what do we see after that happens? We get another bearish market structure shift below these lows, and we actually have fair value gaps form. So we see we have this big gap here and we have this gap here. This is the closest one, so we'll just mark this one out. Price comes into that gap, continues lower. Then we have a break below these lows. So we have another bearish market structure shift. We have more gaps that form. So we mark out our gaps. Then price moves around a lot within this range. It fails to break any highs and lows. You see it comes down to this low here, but it just wicks it. Then it comes up to this high here, but then it just wicks it with this candle. And then we finally break structure. So now we're bullish again. So we mark that out. Bullish market structure shift. We also broke above that high. And then we would expect price to potentially move away from any fair value gap, any of these gaps. Now you can see price is kind of starting to play around a little. You see it reacted off this gap, then it took out that reaction. So there may be a higher time frame play happening at this point. So you would want to use all the time frames and not just use the daily time frame. You can just use the daily time frame, but there are times where price will give a setup on the daily time frame and then it won't work out because there's a higher time frame setup playing, like the weekly or the monthly possibly. So make sure you check all your time frames when you're using this, not just the daily time frame. However, as you guys can see, ICT daily bias is very easy. You're literally just using market structure shifts and fair value gaps to track price, to know whether price is most likely to go up or most likely to go down. It is very simple. It is very easy. I'll show you guys this again. ICT daily bias, all you need is a market structure, which defines if price is bullish or bearish, and fair value gaps, which is your PD array that price uses to push higher or lower. If you guys like this video, make sure to like and subscribe, and I'll see you guys in the next one.